everyone, and welcome back to my channel. So I got a lot of questions after my previous video regarding investment banking recruiting at Cornell. So thank you so much for watching this video and watching all my previous videos. I really appreciate the support that I get from you guys. And also I love being able to answer all of your questions and help out in any way I can. That being said, I decided to create a series for investment banking recruiting, especially anybody who's wants a refresher, wants to break into the field, is recruiting for investment banks in January. So this series of videos is essentially just videos that are based off of the 400 questions guide. I want to be able to break down all of the technical questions, especially either through just financial statements, DCF walkthroughs, sort of just break down each and every aspect of the type of questions that come in these investment banking interviews so that you can answer them as succinctly as possible. So without further ado, let's get into it. So some of the basic questions that are sort of asked in the financial statement questions are essentially, walk me through the three financial statements. What are the three financial statements? What major line items are on these financial statements? And how do these three statements link together? So starting off with the first one, what are the three financial statements? So the three financial statements are the income statement, the cash flow statement, and the balance sheet, essentially stated in that order. And essentially they give you an idea of the general financial health of the company. The income statement will tell you the revenue and the expenses that are there in the company. The cash flow statement gives you an idea of the cash that's flowing in and out of the company. And the balance sheet essentially wants to make sure that the assets are equal to the liabilities plus shareholders' equity. So in that way, you can sort of analyze what the strength of a particular company is and sort of its intrinsic value. So investment bankers would essentially look at all of these three statements to get a generic idea of how the company is faring, how the company is doing. Being able to answer this question succinctly in an interview is just state it pretty smoothly. Try to give a generic sense. Don't delve too deeply into every single aspect of those questions because your interviewer will try to follow up and try to go pick your brain apart and sort of like delve deeper into that. What do you mean by the income statement? What do you mean by the cash flow statement? What do you mean by the balance sheet? And then you should probably give it in some sort of detail. Question, which is really popularly asked, is if you were trapped on a desert island, which would be the one financial statement that you would want on hand? And that would of course be the cash flow statement. And you would say, hey, why can't we take the income statement or the balance sheet? Well, essentially, when we're looking at the cash flow statement, we'll get a good idea of what the operational strength of a company is, independent of all the non-cash expenses. With the cash flow statement, you'd be able to see the cash that's coming in and out of the company, which is independent of all of those expenses that are on the balance sheet and the income statement. So that's why you look at the cash flow statement. And if they ask you, hey, what are the two statements that you need? Obviously, you look at the income statement and the balance sheet because, again, you can use those two statements to be able to generate the cash flow statement again. So your cash flow statement is essentially your king because it's independent of the non-cash expenses that you have, and it will sort of give you a general idea of the operational strength of the company. Another question that gets famously asked is how do you account for $10 of depreciation on an asset? And how does that sort of impact all three of the financial statements? And could you walk me through that? This is a very basic sort of math question that comes up. Normally the other ones tend to be a bit more complicated, but we'll just start off with the basics so that you guys get an idea of what we're working with and sort of how to answer these questions and how to go about it. So I actually have my whiteboard here. So I figured I'd answer this question using that. It'd be helpful to anybody who's sort of watching, and then we can just break it down step by step. Before we get into answering this question properly, what exactly is depreciation expense? So depreciation is when a company has a particular asset and over time it sort of wears and tears. So let's say you're a restaurant and you had like an ice cream machine. After a couple of years, it doesn't work as well as it did when you first bought it. So that sort of wear and tear of that machine is counted as a depreciation expense on your income statement. And depreciation is a non-cash expense, which means that it's tax deductible and it reduces your taxes. So the basic concept that we have when we're looking at the income statement is that it will impact the income statement, but it gets added back to the cash flow statement because it's a non-cash expense and we have to make those adjustments in the cash flow statement. So when we're talking about $10 depreciation, the first thing that we're going to do is we're just going to take a look at the income statement. So I actually have my whiteboard over here. So looking at the income statement, our first thing is that it's going to impact our operating income. So we have our operating income, which is going to go down by, let's say our depreciation expense is $10. So operating income is basically we have our revenue minus the expenses. So we have $10. So it's going to go down by $10. Then we have our taxes, right? So because we have taxes, let's say we consider to be like a 20% tax rate. So 20% tax rate, applying that tax rate back onto your operating income would mean that your operating income, 20% tax, 20% of 10 would be $2. $2. So your net income, which is, because you have to take out the taxes, it would be down by $8. Now, in my previous question that we answered was that how do these three statements link together? This net income is essentially going to flow down into our cash flow from operations. So it's going to flow into our cash flow statement. So we have the cash flow statement. It's going to go into cash flow from operations, which is going to be down by $8 because our net income. But the thing is that depreciation is a non-cash expense. So since it's a non-cash expense in cash flow from operations, we have to make this adjustment. We have to add back this depreciation back into cash flow from operations. So we have -8 and then +10, okay? So we add back +10, so that would mean that our cash flow from operations is up by 2. Now, we're going to go into balance sheet. And the basic concept behind the balance sheet is we have assets should be equal to liabilities plus shareholders' equity. So we sort of draw our T, which is assets, and then liabilities plus shareholders' equity. You have assets, which would be your $2 from the cash flow from operations. So you have +2, which flows into the asset side of the balance sheet. And then you also have the depreciation expense, because depreciation essentially impacts your assets, right? You're going to say, okay, my asset has gone down by this much amount because of the wear and tear that happened over the couple of years. So because of that, you're going to put -10 on your asset side. So you have -10 on the asset side. And then you look at liabilities plus shareholders' equity. Now, we talked about how the income statement, it flows into shareholders' equity. The net income will flow under retained earnings in shareholders' equity. So our previous number from the operating income was -8, right? Now you have +2 and -10 on the asset side, which would give you -8. And then you have -8 on the liabilities and shareholders' equity side. So essentially what happens is that your balance sheet will balance. And that's just basically how depreciation impacts those three statements. This is kind of what I wrote on my sheet. I don't really think that, I don't know if you can see that, but basically when you're talking through this question, make sure that you don't go too fast when you're doing the math. Make sure that you account for taxes, and also break down this question very slowly, because when you go too fast and you try to answer this question too quickly, it can be kind of difficult to keep all the numbers in your head, which is something that I struggled with when I first started out. So make sure to answer them pretty slowly, and then speed it up as you get more and more confident when you work through these questions. So another question that sort of gets asked as a follow-up to this is that if depreciation is a non-cash expense, then why does it affect the cash flow? So that's because depreciation is tax deductible. Now, what does that mean? Is that basically it reduces the amount of taxes that you have to pay. How do you pay taxes? You pay them by using cash. So essentially we add back that depreciation to show that the cash is not being used up, because you're trying to reduce the amount of taxes. You're reducing the amount of cash that's coming out of the company. So you're basically adding back that depreciation. Essentially, that's sort of a follow-up question that can come for that. But basically the generic concept is that what is depreciation, and sort of remembering that depreciation gets added back to cash flow from operations, and that it's a non-cash expense. So I hope that this video was helpful to anybody who's watching and trying to go through the 400 question guide and still studying for these interviews. If there's any questions that you'd like me to answer specifically, I will try and sort of make a video about it and upload it. But thank you so much for watching this video and all of my previous videos. Before I log off, I also am having one-on-one consulting sessions. So you can book those consulting sessions through my Calendly link, which I've placed in the description below. Other than that, please subscribe to my channel. Please, keep watching. Any support that I get from you guys is great for my channel. I hope you guys like this video and all of the previous videos that I've put up so far. Thank you so much for watching, and I'll see you next time. Bye.